All right, let's talk Kura Sushi, ticker KRUS. We're going to dive right into their latest quarterly earnings call, and believe me, there's a lot to unpack here. So, what's the big story here? Well, Kura's quarter is one of those classic head scratchers for investors. You've got a revenue beat, which sounds great, right? But then a huge earnings miss. So the real question is, what's actually happening with this company?
Let's look at the numbers. On the one hand, revenue came in at $73.5 million. Now, that did beat expectations, just barely, but it's still up a healthy 14% year over year. But then you look at the other side of the coin, an earnings per share loss of 25 cents. The street was only expecting a 9-cent loss. That is a massive miss, and it's really the heart of the whole issue we're going to dig into.
Okay, so if we dig a little deeper into why things were off, look at this. Comparable sales were down 2.5%. But here's the kicker. That drop was driven entirely by a 2.5% decline in traffic. You know, the number of people actually coming in. Their pricing and the mix of what people bought, totally flat. So they couldn't make up for fewer customers by charging more or selling more expensive dishes. So with all this conflicting news, you'd think the stock would go wild, right? Well, not really. The reaction was actually pretty quiet. The stock only drifted down about 1.4% in after hours. What does that tell us? It suggests Wall Street isn't just looking at sales growth anymore. They're laser focused on one thing: profitability. And that's the perfect segue into the real problem here, the huge squeeze on their profit margins. This is what's really weighing on the stock. So let's peel back the onion and see where all that pressure is coming from. So, the biggest culprit? No surprise, it's food and beverage costs. You can see they jumped up to almost 30% of sales. That's nearly a full percentage point higher than last year, and every single bit of that increase just eats directly into their profits. And management didn't beat around the bush on the call. They pointed the finger directly at one thing: tariffs. Specifically, tariffs on all the ingredients they have to import. And it's not just the food, you know. It's also those little promotional toys and giveaways they have. A lot of that stuff comes from overseas, too. And to really understand just how big of a deal this is, listen to this. During the Q&A, management said the total potential impact from these tariffs was somewhere in the range of 300 to 400 basis points. We're talking 3 to 4 percentage points of pressure. Now, they're working hard to fight some of that back, but man, that is a massive, massive headwind for any restaurant to deal with. All right, so they're getting squeezed on costs. The big question is, what's the game plan? What's management going to do about it? Well, they're not just sitting back. They're fighting back with a multi-pronged attack. Keep growing, raise prices smartly, and lean into pop culture. First things first, even after this tough quarter, they did not back down from their full-year guidance. They're sticking to the plan. And that plan has a few key parts. Keep opening new restaurants like crazy, take some price hikes to cover those costs, and use these really cool brand collaborations to get people excited and back in the door. And that's really the key takeaway here. They are sticking to the plan. They're still calling for sales between 330 and 334 million for the year, and they're still on track to open 16 new locations. For investors, that commitment to 20+% unit growth, that's the heart of the bull case for this stock. So, how are they going to fight that drop in traffic we talked about? This is their secret weapon. They're teaming up with huge pop culture brands to create these you gotta be there moments. They just wrapped up a thing with Kirby. Next up in February is Sanrio, and then the big one, Jujutsu Kaisen in March and April. This is their main strategy to turn that traffic trend around. Okay, so that's the plan from inside the company. Now let's zoom out and look at this from an investor's point of view. How does this all fit into the bigger picture for the stock? And yeah, the context isn't pretty. Look at this. Over the last year, Kura's stock has been crushed, down more than 44%. At the same time, the S&P 500 is up double digits. It's just a brutal underperformance, and it really screams that the market is losing patience with the profitability story. Something else that came up on the call was this thing called a shelf registration. Now, investors get nervous about that because it can mean the company is about to sell more stock. But the CFO, Jeff Hughes, he tackled it head on. He basically said, hey, this is just good housekeeping. It's about being ready for anything. And, with 75 million in cash and zero debt, he stressed this isn't some desperate need for money. It's just about having flexibility down the road. Now, here is a wild card you absolutely have to know about with Kura. the short interest. It is sitting at over 26% of the float, which is crazy high. That means a ton of people are betting against the stock. It's a huge red flag of negative sentiment. But it also creates this tightly coiled spring. If any good news hits, all those short sellers have to buy back their shares, and that can cause a massive, explosive move up called a short squeeze. All right, we've looked at the good, the bad, and the ugly. So let's put it all together and get to our take. This is the next call on Kura Sushi. So our rating on the stock is market perform. Look, the growth story is still really exciting. There's no doubt about that. But it's being completely canceled out by the huge risk around their profit margins. For us to get more positive on this stock, we need to see a few things happen. 1, get those comparable sales back to flat or positive. 2, show us you can handle these tariff costs. And 3, those pop culture collabs, they need to work. They need to drive traffic. Until we see that, we think the stock is probably stuck in a range with that massive short interest always lurking as a potential wildcard. But let me leave you with one final thought, a what-if scenario. You've got that huge short interest, right? And then you have this Jujutsu Kaisen collaboration coming up, which is one of the biggest anime franchises on the planet right now. What if? What if it's a massive hit? If that collab drives a huge upside surprise in sales, you'd have good news hitting a stock that tons of people are betting against. That is the perfect recipe for an absolutely epic short squeeze. It's a total long shot, a high-risk, high-reward gamble that all comes down to execution. And of course, please remember, this is not financial advice.